You're this one. Surrender. Back to sender. Send whatever. Man. I heard it. But
Good evening. Can you hear me? Please, good evening. Can you hear me? Let me know if you can hear me so that we can move forward. Okay. You're welcome. Yes. So, I know you know the basics of trading. You know, the what is forex, what are the terminologies, what are the market trends, what are the. Okay, let me do it this way. Just send me a list of the things you know in forex trading. Just give me a list. Right, like type them out. Yeah, not on WhatsApp. Just type them out for me so that I know where to begin from. Are you there? You can be sending it one one so that I know that you are here. You are following. Please, um, let me not be waiting in vain. So just send them one one. I want to know that we are together. Support resistance, trend line, a golfing bar. Oh, this is kind of cherry picked because if you are not support and resistance, there are some things you should know alongside. A little about drawing a trend line, engulfing bar. If you know engulfing bar, you should know some things alongside. Okay, so if these are all you know, you really don't know much concerning forex. And I'm actually surprised because you have been following me for long, for years, and I've done free classes of which you have attended. And as even sent some of my free classes, I send the link of the training to the WhatsApp group. That is the general WhatsApp group. I don't know if you don't go through them because you should have known more than this by now. But not to worry. I'm not going to be dealing with the basics of forex trading. I believe that you know that. You know what lot size is, right? You know lot size, you know pips, you know lot size, pips, broker, buy, sell, bull and bear, long and short. You know all of those stuff. You know types of traders, the scalpers, the swingers, the day traders, and the position traders. You should know those stuff. Then you should know the timing of the market, which is Sunday 10 p.m. till Friday 10 p.m. That's the timing of the forex market. You should know all of this stuff by now. So what I'm going to be doing for today, we'll learn about we start from the basics of forex trading. Not basics of forex trading, sorry. We start from the basics of technical analysis. That is what we should start from. So that is where we are starting from. On that, I'm going to be, let me know if you can see my screen. On that, we are going to be doing these stuff. Let me outline what we cover for today. So we'll cover the market trends, that's the uptrend, downtrend, Shopee, and the ranging market. That is what we'll cover today. Then, if we still have time, we will be going into support and resistance. I know you have typed that you know it, but I'll have to take that again. Do you know what I'm doing this? I'm going to assume that you don't know anything concerning technical analysis. That's what my assumption would be. So because of that, I'm going to be teaching you a fresh technical analysis. That is what we focus on. So for market trends, we have four type of the market trends. We have the uptrend, we have the downtrend, we have the shopping market and the ranging market. I know you have heard stuff like the trend is your friend, the trend is your friend, take advantage of the trend, go trade in line with the trend, don't trade against the trend. Now, if you do not know these trends that is being talked about, you will not be able to make the trend your friend. You will not be able to trade in line with the market trend. Okay, so we have four types of market trend: the uptrend, the downtrend, the choppy, and the ranging. Now, you know from your previous experience is that what you do in forex trading is to buy and to sell. That's what you do. You either buy or you are selling. You're either buying or you are selling. That is the two things we do in trading. So you have to be where the market is at for you to profit from the market. So if the market is in an uptrend and you are selling, you will not profit from the market. If the market is in a downtrend and you are buying, you will still not profit in the from the market. So what you do is to know where the market is going to and join the trade. You know where the market is going to and join the ride. That is what you are supposed to do when it comes to trading. You do not manufacture what you want to do. You understand? You will not wake up in the morning and say, I feel like buying today. I feel like placing a buy order on a particular pair today. So you just enter your chart, look at anything, say, even though this is a downtrend, I want to place a buy order. Then you go and place a buy order. You will get your hands burnt. That is not how trading works. Trading is calculated. Trading is calculated. Don't just jump into a trend because you see that that trend is going. Okay. So I think we should start from the support. That will give us a better footing on what we are going to be learning today. So let's start from the support and the resistance so that we can build on it. Okay, so that we can build on them. So what is a support? What is a support? The support is the lowest part, of the chart from which market buys from. So this is your support. It's the lowest part of your chart from which market buys from. This is the definition of a support. So let's say I want to just take this down. Okay, so let me put it here. So let me take out my let me use this. So for instance, market is coming down. When it gets here, it goes. When it gets here, it goes up. It goes up from here, turns down from here again, and it goes from here. It goes up again. So it goes up again. So we can invariably say that this part from which market continues buying from. I want to drop this. This is part from which market keeps going up from. Let me use a rectangle for this now. This part from which market continually go up from, this is a support. This is a support. So you will just place your zone. This is a zone. So one thing that people don't understand is that the support is actually a zone. It is not a line. It is not an area. You get? It's not an area. It is a zone. So for instance, you can have this. You can put this line here and say that this is a support, but this is kind of wrong. This is wrong because this is more than you can see that this place is a support. There is a mark here. This is where you tapped and you didn't consider this zone. You understand this area. So the support is not just a point, okay? It is a zone or an area. So you use a rectangle bar to mark out that particular zone. Why do you do this? You do this because the market can reverse from this exact point. It can come to this middle and reverse. It can come to this place and reverse. Sometimes it can even come a little below. Just to let you know, this entire place is a support zone or a support area. So it is not just a point, it is a zone. You should get this at the back of your mind. That is what the support is. So whenever the market is around this zone, what I will do is to place a buy order. For a support, you place a buy order. For a support, you place a buy order. So I'm going to be going through the chart right now, and we are going to be seeing areas of support. We're going to be seeing areas of support. So I've seen one now. See that the market was actually coming down. When it got here, it went up. It came down again, it went up. It came down again, it went up. So this actually means that this is a zone, this is a support area. So anytime market is coming to this particular area again, I can expect it to buy. Hope it's clear. Let me know if it's clear. I can expect it to buy. Let me go back again. I want to look for, okay, it's still the same zone. Mm, okay, let me look for this in another pair. Let's see another pair. We are still looking for support. I've seen one. Let me highlight it. So you see the market came here. Market was actually coming down. It came here and it went up. So I'll mark out this place. See that it aligns with the next place. It came here again and went up. Now not too clear. Okay. Just keep on listening. A support is, like I explained, I said a support is a place where the market buys from. Buy, like buy. So if the market was selling before, when it gets to that particular zone, what it does is to buy. That means it will go up. So if the market is coming down before, when it gets to that particular zone, what it will do is to go up. That is that is what support is. So anywhere the market reverses from, okay, anywhere the market goes up from is called a support. So because of this, okay, one thing you should know in technical analysis is that we say that history repeats itself. That is to say, what has happened before has a 90% chance or an 80% chance to happen again. So if a market reverses from a particular zone in the upward direction, it's selling, it gets to that zone and it went up. So we have an 80% chance that when it gets to that zone again, it will repeat itself. That means it's going to go up again when it gets there. Hope this explanation I just gave. Is it clear? Is it clear? Am I waiting your response? Okay. So since you have understood that part, you understand everything that I'm building on it. Okay. So, like I said before, this was a support. This support was formed in 2006, 2005. But then when it came to 2022, the support was respected. You see, so that's why I said it's more like history repeating itself. If something happened in a particular zone, we have a high chance that when market gets to that zone in future, it's going to repeat itself. That is what the support is. That is what technical analysis is, not even support. So everything I'm going to be teaching you regarding technical analysis is based on what has happened before in the chart. Okay. So that is just that. I'm looking for other examples of support. That's what I'm looking for actually. I think I've seen one. So the market was actually coming down here. When it got here, it went up. You get. Then when it came down again, it went up. So this is actually a support zone. If I can mark out this zone like this is what you do. I can mark out this zone so that in case in the future when market gets to this zone, there is a 90, let me just use 80 to be modest. Let me use 80% chance that when market comes to this zone again, it's going to go up. Okay, so that is what the support is. Is it clear now? Are we good? Are you still here? Because I can't get a response from you. Okay, so since that is clear, let's go on. Mind you, I don't want to forget. So I teach is that everything I teach you for that day, I give an assignment on it. So you have to jot it down. You send me now we are teaching support. So you send me two charts highlighting support areas. Understand? Send me two charts that highlight support areas, support zones. Two. We'll still do resistance. So you send me two charts highlighting resistance zone. This is how I actually know that you understand what I taught. Okay? So let's take a note on the resistance. Okay? So let's take a note on the resistance. So what is resistance? I love writing first, don't worry. So the resistance is the highest part of points. I use the highest part of the chart from which market says from. So this is what the resistance is. Now the support is the lowest part. However, the resistance is the highest part. Okay, so we have something like this. So we can have something like this up, down, then up again, and down, then up. So this is practically a resistance. So this is practically a resistance. The top now, where the market is selling from, is a resistance. So I'm going to mark out that zone. I'm going to mark out that zone. Just this top is a resistance. So for a resistance, what you do is to place sell orders. For a resistance, what you do is to place sell orders. So when market is getting to a resistance and it's clear that that place, like, okay, let me establish this. A support is not yet valid until it has been tested twice. A support is not yet valid until it has been tested twice. So for instance, now that let me use this place. You saw the market. Let me take it to the middle so I will see clear. Market was coming down like this. You see, and it got to this point and it went up. Now this place is not yet counted as a support because it has not been tested for a second time. So by the time market gets down to this place again and respect it, that is when we will acknowledge this place as a support. Is this part clear? What I just said? So since it just once, we don't count it here. But by the time market comes down again and we respect it, we count it as a support. That's how it works. So for this, when market goes up, comes down, goes up to that same level and comes down again, this is when we establish that that place is a resistance. You get? So I want to let's see some examples. Some examples of I've seen an example. So let me highlight this list out. Okay, so market was actually going up from this place. Market was going up. It got to this place and came down. Came here again and came down. So that means that we tell you that this place is a resistance. So what you do as the market is coming up and it gets here, what you do is to place a sell order. Like I said before, for a support, you place a buy order. For a resistance, you place a sell order. You place a sell order. So that is how it works. Is the resistance clear? I'm awaiting your response, please. Wait. Are you here? Okay, so I just saw an example of a resistance. So this is the first example, second example, and a third. And market just started coming down. So this is a resistance. For a resistance, you place a sell order. So, like I've said before, resistance you sell, support you buy. There's something I used to call diagonal resistance. I will draw that for us for you. Diagonal resistance. So it's something like this and support. So it happens in a trending market. No, let me take this out. It's not satisfying. Let me go to another pair. Mm, okay, so we have something like a diagonal resistance. It happens in a trending market. So for something like this, you connect the eyes. Look at how to draw a trend line. Connect the eyes. Hope you can see what I just did. Then connect the lows. So it is a trending market. So what you get is a diagonal resistance, not an horizontal support or resistance. What I taught you earlier is horizontal support and resistance. However, this one is diagonal support and resistance. It's slant, it's not straight. So when you draw something like this, you know that at every point the price gets to this trend line that you have drawn, that is a resistance. At every point that the price gets to the support, the trend line, but the bottom of the trend line that you have drawn, that is a support. Okay, I've seen one example. So you see this one now that is here. Let me, okay. You see that this support and resistance now, it is not slant. You see, it's a trending, it's a trending support and resistance. So markets came down here, went up from here, came down, went up, came down again, went up, came down, before it finally broke out of the trend. So in this type of trending support or resistance, you still do the same thing. When it gets to the support you buy, when it gets to the resistance you sell. Just that the difference between this now is that it's not slant, it's not straight, but it's slant, but it is still support and resistance. Hope is clear. Is it clear? Let me get your feedback before I continue. I'm awaiting your feedback. Uh, Actually, you are keeping in step with me. Seems as if you are going off and on. If you are not here, yes, 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 exactly. That is how it is. That is how it is. So I believe that you have gotten it now. So the next thing that we'll be looking at is our market trends. Our market trends. So we have four market trends. We have four market trends. Although some say it's three, but me I just sit with four. So for the four, we have the uptrend, the downtrend, we have the ranging market and the shopping market. So for the uptrend, you have consistent highs. That is to say the market just goes up continually. So you have something like this. For an uptrend, so this is what an uptrend look like. So your trend starts from this bottom. It starts from this bottom. Okay, I get. So it starts from this bottom and it goes up. You see that this next point is higher than the previous point. This next point is higher than the previous point. Then this next point is also higher than the previous one, and just like that. So what you see that the market is going up continuously. The market is going up continuously. So when you see a market that is going up continuously, what you do is to take a buy order. What you do is to take a buy order. So this is actually an uptrend. These are not trends. So what you do is to place buy orders in an uptrend. But I want to look for a proper uptrend because that also serves as a ranging market and it's not a perfect example for me to use. So let me get a perfect example to use. I don't want to use a ranging market. Okay. So this is an uptrend. Market came to a support and started going up. It went up, got to this resistance at this top before it got here again. Let's see. Okay, it was just ranging like that. Okay, so this is an uptrend like this. Market going up continuously. That's what an uptrend is. For a do you get the this is also an uptrend. This is also an uptrend. Market going up continuously. From here, market going up and market going up. Until it got to, I believe this is a resistance and it came down. So this is an uptrend. So this is what an uptrend looks like. It's not rocket science. It's just for you to train your eyes to see what the market is telling you. I'm actually getting other examples for clarity purpose. Okay, I've seen another uptrend here. This is an uptrend. Market goes up, a little pullback goes up again, and just like that. So this is another uptrend. You see how uptrend is. In a downtrend, I know some people do this, but it is not advisable. Do not take a sell in an uptrend. It's called counter trading. It's called trading against the trend, and it is wrong. It's not professional when you trade like that. So what you do is to place buy orders when the market is in an uptrend. That is just it. That is how simple it is. So for is the uptrend clear? I'm awaiting your response. Yeah. So you know what I mean. The word is uniform of Friday. On Thursday. Now want again to check. Okay, so for the downtrend, the market keeps coming down continuously. That is why it's called a downtrend. So what you do in a downtrend is to place a sell order. What you do in a downtrend is to place a sell order. That is what a downtrend is. So I'm actually looking for examples of downtrend so that I'll show you. You see, if you can get this correctly, you see that is more like words and opposites. So the support is the opposite of a resistance. The uptrend is the opposite of a downtrend. You get? So when you place a buy order in a downtrend in an uptrend, you place a sell order in a downtrend. When you place a buy order in a support, you place a sell order in a resistance. So I was looking for an example of a downtrend, and here you have it. This is example of a downtrend. Are you getting it? This is an example of a downtrend. Okay? Is the downtrend clear? Now, what you want to know is that no trend lasts forever. If a trend lasts forever, it is improper. There is no trend that lasts forever. So an uptrend reverses to a downtrend, while a downtrend reverses to an uptrend. So this is where the support and the resistance comes in. So if the trend is an uptrend, when it gets to a resistance, it becomes a downtrend. It starts coming down. If the market is in a downtrend, when it gets to a support, it becomes an uptrend and it starts going up. You understand? So there's no trend that lasts forever. The trend is either down or it's up. Okay? It's either down or it's up. It reverses at the moment it gets to either a support or a resistance. Now, are there times that the market breaks support and resistance? Yes. Okay? The market sometimes breaks support and resistance. And okay, like this now, this is a support, right? Because this is a support, this is a support, this is another support. However, we saw that market broke away from the support, and this is where we got a downtrend from. So the downtrend continued. Market didn't respect this support. So there are instances where market actually does not respect that, but that is when the trend has been exhausted. There's what we call exhaustion of a particular trend. So a trend, like I said, that a market will not trend forever. A market will not trend forever. So for instance, okay, don't worry, let me use I want to delete this now. Let me delete this. So let's say the market has been coming down like this. This is a downtrend, right? But then it just gave and started going up. So it becomes an uptrend and just like that. So at this point where the market, oh, I did that wrongly. So at this point where the market reverses from, this is called a support, and the market reverses from this downtrend here, it became an uptrend. So this is where trend changes from a downtrend to an uptrend. When it gets to a support or when it gets to a resistance, that is when what we call the market has reversed. That is a reversal. Also, there are instances where the market does not respect it. Maybe this particular support has been touched one, two, three, four, 5 times. So that support becomes weaker. And what market do is to break through it. It doesn't respect it anymore. It breaks through it. Okay. In breaking through it, that is when a support has become a resistance, or a resistance has become a support. So I'm going to highlight that for you. So now you saw that this has been a support all this while. Like, let's use this as a practical example. So this is a support zone, kind of. So the market has respected it one, two, three, four times now. And by the fifth time, market broke through it. So this support is no longer valid at this point. So what happened here was that this support became a resistance. Let me mark the support. Hope you can see this is the support zone now. But however, when market got to this place now, it came down. When it got up to this place, it came down, making this place now a resistance zone. So a broken support becomes a resistance, while a broken resistance becomes a support. I believe this is clear. A broken support is a resistance. A broken resistance is a support. I believe this part is clear. Okay. So for this one, is it clear? Before I go to the next thing.
Okay. What industry? Sorry.
Okay, so we can proceed. So the next market is the ranging market. The ranging market is such that market goes between a defined support and resistance. Market goes back and forth within a defined support and resistance. So it is neither in an uptrend or in a downtrend. It's just going back and forth. So we have something like this as a ranging market. Okay. So this is a ranging market. We have equal highs and lows. We have equal support and resistance. So we have something like this. We have something like this. Say that the market is ranging, is equal. You get. So this market has a 99% success rate. Do you know why? Because you know exactly where to exit from. You know exactly where to enter from. Just that the problem with this market is that it's you may not cash it on time. That's the truth. You may not cash it on time, you may not see it on time, but anytime you see it, you can cash a very good piece on this market. You get, because the success rate is very high. So for this ranging market, when the market is at its support, you buy. When it's getting to the resistance, you exit that your buy order and you place a sell order. So you just be buying back and forth, like buying and selling until the range is exhausted. That is to say, the market either breaks below the support or it breaks above the support. So you get the range is exhausted, but before then you'd have made good amount of pips from this particular market, the ranging market. So let's look at some examples. This one is a ranging market because the highs and the lows are equal. The highs and the lows are equal. I want to look for another pam, 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 another ranging market. Mm, I'm trying to look for other examples though, so that I just saw one now, but the trend was exhausted. Is it? I think I clicked on something just now. Okay, not this.
Okay.
Okay, look at one arranging market here. So you see that market got a support, it came down. I mean, a resistance came down, support went up. So it was going back and forth until the range was finally broken through and market is going up. So this is an example of a ranging market. I think this range lasted for, this was, it started in June and ended in January last year. Though, so for about 6 months, this pair was ranging back and forth. So imagine cashing this early, and what you do is to place sell orders. You understand? So this is something that you should know. This is a ranging market. Is the ranging market clear?
Which kind of market you go say? I beg you, make us still say the market too.
Is the ranging market understood? No, it's not an uptrend. It's just flat. It can, this one now is because the example I gave you was that. Okay. You can see another example in a downtrend too. Okay, let me open this one. Let me go to a low. It doesn't seem like uptrend. Okay, look at this one now. I know this one now, you said that it seems like a downtrend. So it's just the example I got. So this is another example of a ranging market, equal highs and low. See that market came down, went up, came down, went up, came down, then went up and broke above the support, the resistance, sorry. So I think I've seen another example of a ranging market. So it doesn't look like uptrend. As long as, okay, let me give you a sheet code for ranging market.
Okay.
As long as the support and resistance are clearly defined and it is equal, mark that word equal, it is equal, it is a ranging market.
Yeah.
Either it's ranging down or it's ranging up. Like this is an uptrend, clearly. You see how it just went up, it's an uptrend. Okay, so if the highs and the lows are equal, it is a ranging market. Is that clear?
Yes, now weekend, now weekend. Okay, virtual meeting. I know if this weekend, no, just do virtual meeting because this weekend, no, go dey open for
So
me. Go.
the last one is the shopping market. The shopping market has no clear direction. Market is just doing its thing, dance, going back and forth, dancing on your own, turning on your own. So in this kind of market, you don't trade, you just stay away because it's frustrating. Understand? The market is not making headways, so you don't want to get entangled in something that is not going headways.
Make I say amen.
This is a
Make I say
shopping
amen
market.
first. Make I say amen
This is
first.
a shopping market. So you don't want to get entangled in something that is not going anywhere in this shopping market. So what you do in a shopping market is that you stay away from the trend. Just don't trade. You see that it's not having any clear direction.
Amen.
You do not trade. You just stay outside. So this is an example of a shopping market. There's no clear direction. It's just going back and forth, just dancing in one spot. That is a ranging market. I mean, sorry, it's a shopping market. I'm looking for other examples. Okay, for something like this is a shopping market. No clear direction, so you just stay away. Don't trade. Um, this is a shopping market, yeah. So, if you do your research well, shopping market always occurs after the market has made a big move. So after a very big move, like something like this, the market just becomes shoppy, just do its own thing before it makes another serious move. You understand? So that is how shopping market works. Like now, this it did this huge move like this, and now if a sudden it just dancing and dancing, and before it came down. So this is a shopping market. For a market that is shopping, we say that the market is resting. That's what we used to say. That the market is resting. So you are allowed to rest. When it's done resting, you start trading again. That is how shopping market works. Is the shopping market clear?
Which of this? Okay, Mr. Ochi. Yeah, make I remind Mr. Ochi, not Mr. Ochi. You forget you are not getting child.
What do you want to go? I believe this shopping market is clear.
Which comment is that? Okay. Okay. Now please tell family, okay, you say make I remind God.
I'm awaiting your response, please.
I can't post yet, so now I won't post the content, the girls to pick now.
It's clear enough. The shopping market is tightly squeezed. Look at what I drew. Look at the shopping market. It's just together. Are you seeing it? There's no difference. The ranging market has equal highs and lows. So the ranging market is something like this. It's bigger. It has equal. The spaces in between them is different. But this shopping market, look at the difference. This is a shopping market. Market is just going back and forth. No clear direction. But I showed you examples of ranging market. I don't know if I can still go because I just stumbled on them. Not that I've prepared it earlier. Okay, now look at look at a ranging market example I showed you now. Are you seeing the ranging market is equal? But look at a shopping market. It's just like this. This is it. Very tight and squeezed. It's not there's not enough space in between them. However, the ranging market, you can see that there are spaces for movement. Is it clear now? Is it clear now? Yes, there's no space, so that is the difference. Okay, that's the difference. So that will be all for today. We have seen support resistance, we have seen the uptrend, downtrend, trending ranging market and the shopping market. So your assignment, you give me two charts each. That means I'm expecting 12 charts from you. One from support, one for sorry, two for support, two for resistance, two for uptrend, two for downtrend, two for shopping, two for ranging. You mark them. You see the way I'm marking them like this. You don't just send me chat. You just screenshot this whole thing and send. No, you have to mark them out. Where is the support? Is either you are using these trend lines, the horizontal lines, the rectangle bar, or you are using this brush that is here to mark them out so that we know what you are showing me. You understand? So that is the assignment. That'll be all for this evening. We will see whenever we see. Okay. So you can actually log out now. Yeah, okay. Let's match. Yep. Carry.